If you've been tracking the AI boom, you definitely know that GPUs take center stage. But today, we're going to look much deeper. We're exploring the real hardware reality behind those massive data centers, the crucial connectivity, and specialized chips that actually make these giant AI brains work. This is exactly why analysts are increasingly seeing Marvell as a completely indispensable element in modern AI infrastructure. Look at this massive endorsement. This is a direct quote from Nvidia CEO Jensen Huang at Computex. He shocked the market when he stood beside Marvell's CEO and threw his full weight behind this future valuation. And this wasn't just a polite nod either. Marvell's stock surged 30% in a single day, adding tens of billions to its market cap and pushing the stock to all-time highs. So you have to ask yourself, what exactly makes Marvell, a company historically known as a mid-sized networking firm, an absolute backbone of the AI revolution? Section 1, the vision of a trillion-dollar market cap. To put Jensen Huang's bold prediction into perspective, for Marvell to actually hit that trillion-dollar market cap, its stock price would need to reach exactly $1,143. That is a massive 3.23-fold increase from its current valuation. So, what kind of technological foundation could possibly support that historic leap? Let's get into Section 2, the nervous system of AI infrastructure. The secret sauce here is a concept called disaggregated computing. You see, modern AI doesn't just run on one magical superchip, it runs on thousands of specialized chips spread out across giant facilities. For them to function as a single, cohesive brain, they require ultra-fast, low-latency connectivity. If Nvidia's GPUs are the brains, Marvell's networking tech is literally the nervous system. This industry-wide shift to disaggregated computing is exactly what's opening the door for Marvell's future market cap growth. And this brings us to a huge debate in the industry: copper versus optics. Data centers love using copper connections wherever they can just to save money. But when you are scaling up across massive AI architectures, copper physically maxes out. You absolutely need optical connections. And in this arena, Marvell is the undisputed king, holding over 90% of the optical connectivity market inside these data centers. Moving on to Section 3, crucial partnerships and acquisitions. So how did Marvell build this impenetrable technological moat? Through highly targeted strategic acquisitions that massively expanded their tech portfolio. Buying Inphi in 2021 was an absolute home run for optical chip design. Taking over Avera and Innovium gave them a rock-solid foothold in custom accelerators and high-speed switches, and their recent grabs of Celestial AI and XConn pushed them deep into silicon photonics. This new photonics tech dramatically expands data center capabilities by using light to transmit data right at the chip level, drastically cutting power consumption and boosting speed. Now, the stakes get really real with this number: $2 billion. Nvidia didn't just offer verbal support, they recently committed to a massive $2 billion strategic investment directly into Marvell's ecosystem. The financial impact of this is huge for long-term investor confidence. It ensures that Nvidia's tech is tightly integrated with Marvell's hardware, which directly and undeniably strengthens Marvell's market position right at the peak of AI infrastructure. Beyond just networking, there's the custom silicon side. Marvell, working closely with TSMC, just demonstrated the industry's first 2-nanometer silicon IP. Why does this matter? Because hyperscalers like AWS and Microsoft don't want off-the-shelf stuff anymore. They want custom accelerators. What's more, Marvell is now building full-stack systems for these customers, going from the raw chip design all the way to complete server integration. They're delivering exactly what these tech giants need to run their very specific AI workloads. Section 4, rocketing growth of financial outlooks. When you look at the projections, Marvell's portfolio is aggressively tilting toward generative AI revenue. In fact, AI-related sales, meaning the optical chips, custom accelerators, and high-speed switches, are expected to combine and drive nearly half of Marvell's total revenue by fiscal 2029. The traditional enterprise and carrier networking segments are basically taking a back seat to this massive AI boom. But here's what's truly fascinating: the massive gap between what external analysts predict and the sheer confidence of Marvell's own management. While external models forecast some very impressive growth, management recently set targets so optimistic that Wall Street analysts had to frantically rewrite their models. Just listen to this. During their Q1 earnings call, CEO Matt Murphy dramatically upgraded their revenue targets. They're now targeting around $11.5 billion for fiscal year 2027. That's a 40% year-over-year growth. And for 2028, they bumped that up to a staggering $16.5 billion. The interconnect business alone is projected to grow over 70% next year, and that custom silicon division is aiming for over $10 billion in revenue by fiscal 2029. Talk is cheap, right? But Marvell is putting their money where their mouth is. They've committed roughly $1 billion in supplier prepayments for fiscal year 2027 just to secure massive capacity in the supply chain. This highly capital-intensive expenditure proves the firm's incredible ability to fulfill demanding orders. You literally do not shell out that kind of cash to secure chip manufacturing capacity unless your AI infrastructure order book is completely bursting at the seams. Section 5. Market Risks and Long-Term Confidence. Okay, we have to be real here. At Marvell's current stock price, perfection is essentially already priced in. Analysts are quick to point out a few major hurdles. There's high customer concentration, meaning a heavy reliance on just a few giants like AWS and Microsoft. Plus, that aggressive valuation leaves almost zero room for error. These valuation risks deeply influence the decision-making of long-term investors, because Marvell has to flawlessly execute, turning these complex 2-nanometer chip projects into repeatable, high-volume production, while networking standards for AI are still rapidly shifting. Despite those risks, the analyst consensus remains incredibly optimistic about the company's fundamentals. For patient investors, any short-term pullbacks are viewed as major opportunities. The logic here is straightforward. The stock might see some volatility, sure, but the long-term shift to generative AI is an unstoppable force, and Marvell simply owns the absolute most critical layer of data connectivity. So I'll leave you with this final thought. If building out AI infrastructure is truly just entering its massive scale-out phase, does Marvell's undeniable stranglehold on the data center's optical nervous system actually justify a trillion-dollar leap? It's all about weighing an incredible technological moat against euphoric market expectations. Thanks so much for joining me for this explainer, and be sure to keep a close eye on what's happening behind the scenes of these modern data centers.